It is a huge week in the stock and crypto markets, and we're going to be jumping into everything that we're keeping our eye on. We're also going to be discussing what happened last week. This is the first show of the financial markets show over here on FLOLiO.com. Thank you for being here. Nothing we say today is financial advice. Please hit that like button and subscribe to our channel to get more financial market and NFT content if you're into that sort of thing. Kevin, excited for our first episode of the show. We've been discussing this for a little while. How are we feeling today?
Feeling great. Excited to dive in and talk everything financial, both crypto and stock market. So it's going to be a good day.
The excitement is oozing out of you. I can feel it. But let's get into what happened last week before we discuss the week ahead. So some big things, every week lately has been big. There hasn't been a dull week all year. We had some macroeconomic data came out. We saw personal consumption expenditures, or PCE is what we're referring to it from here, because I don't want to say that many big words in a row. Core rose 0.5% month over month and 5.1% year over year. If you include food and energy, it was up 0.3% month over month and 6.2% year over year. So, some divergence there. That led to that came in around expectations. So that led to a little bit of a market rally last week as people, using that data to hope that the Fed isn't going to do anything more than a 75 basis point hike. I would venture a guess, we've seen that CME Group has had their basis point probability at 75 for most of the month. And that, last I checked, was about 81% chance of that. They've been very accurate with it so far this year. So I have to venture a guess that 75 basis points is already priced into most markets. And I think that the PCE data alleviates some fears that maybe it would be a 100-point hike.
Yeah, I agree. I think previous month too has also allowed it to price in when we saw pretty much huge liquidation event. But regardless, I think everyone's expecting it to be 75. If it's 50, I don't know which way the market will turn, if the Fed is pivoting or if they're just thinking they're not doing enough. Really depends on the data that comes up too.
Yeah, and we'll get into it, but in this week ahead, the big job, the jobs report that could impact that doesn't come out until Friday, which is after their meeting. Right. So we could see that plays into a bigger expectation of, the December meeting, middle of December will be a 50 or 75 point. We also saw the advanced estimate for Q3 GDP increase of 2.6% after GDP was down in Q2. So, there's a lot of data that goes into that one. We saw that, increases in exports as a lot of other countries are not able to get some goods that they need, due to the war in Ukraine, and the U.S. has been exporting more as a result of that. Also, an increase in government spending, which, when you dig into GDP, the numbers from last quarter a little bit more, it's not quite as rosy as you would think from it was up 2.6%. We're not going into a recession. Everything is great. Not right. The case.
Yeah, especially when you have a higher government spending, that's just going to increase inflation. It's just more debt that we're going to end up having to pay.
Yeah, and it looks like consumer spending is down. We saw the data come out from, I forget if it was U.S. Bank, but one of the major banking institutions that, people have more money in savings over, the last year than they have in previous years, and how that's a good thing. Well, not if people know that the economy's a shit show right now, and they want to have that money there because they know that things are only going to get worse. The consumers aren't always the smartest people out there. Not that we are, but I think people kind of realize that things are obviously getting more expensive. It's impacting a lot of businesses and consumer spending. I think as we move through Q4 into the holidays, we may see a tick up a little bit in the Q4 numbers when we get to, the holiday season. But other than that, I think people are just really, tightening their belts, expecting a bad economy for the years to come.
Oh, definitely. There's also been a huge surge in the amount of credit that consumers have been taking out recently. It's exorbitant levels. It's just savings are going down. Meanwhile, or not savings going down, but the amount that people are making is going down, paired with the amount of debt that people are taking on. It's not necessarily a good indicator for what's to come in the coming months, next year especially.
No, yeah, consumer debt in the U.S. is at an all-time high, which is not a great indicator. Okay, we also had earnings. We're in earnings season. We saw tech earnings, and future guidance from a lot of those tech companies was not great. We saw Meta just totally shit the bed. They've put so much money into their metaverse project. If you believe in the value of that in the future and you believe in Mark Zuckerberg, once again, not financial advice, Meta at $93, could it keep going down? Absolutely. Could we look back in 3 to 5 years and say this was an absolute steal? I think that's also a very strong chance as well.
Yeah. I'm not even sure how to do Meta at this point.
Yeah, absolutely. It's like with everything risk on at the moment. It is, you can try to time the bottom, I guess. You can dollar cost average. You can do whatever you want there, but I'm still a believer in a lot of these things long term. Maybe not Zuck and Meta per se, but we saw Amazon dip to a price that I viewed as very attractive. Same thing with Microsoft. Tesla a few weeks ago had some good results. So I think there's still a lot to be positive of long term. This comes down to knowing your risk tolerance, knowing your time horizon for your investments, not trying to get caught up in trading this market if you're inexperienced, which Lord knows I am not trying to trade this market. I am very much of the buy and hold mentality. So those were some of the things over the last week that we were looking at. Let's discuss what's coming up this week. So Kevin, why don't you start with the FOMC meeting on Tuesday and Wednesday?
Yeah, so we got the FOMC meeting coming out. We're going to expect the minutes to be released, and the basis points that's going to come out on what day is it? The 14th?
Wednesday.
That's Wednesday?
Yeah, Wednesday is going to. Yeah, the meeting starts tomorrow. The minutes, or not the minutes, the announcement of the rate hike will come out at 2 p.m. Eastern Standard Time, and then Jerome Powell will speak at 2:30 Eastern Standard Time.
Yeah, that's definitely going to cause tons of volatility in the market. I mean, even for how late in the game this is, and like we said, most of this is pretty much priced in. We're assuming at 75. I would not be surprised by high liquidations, both in crypto or in even just a traditional stock market. I think a lot of people right now are front loading, as we saw in the past few weeks. We saw the pump into Friday last week, but I don't know. It's going to be very, very volatile, I think.
So something that I've been looking at, and I saw someone else post, was the volatility around the announcement and then when Powell started his presser. So far this year, it's been very consistent that when the rate hike comes out, the markets go down sharply. When Powell starts speaking, the markets recover and trend back up. It hasn't been 100% of the time, but it's been the majority of the time. Now, I do not try trading these situations. Just something I wanted to point out, for those out there who may see, that volatility. If you're new to, Jerome Powell's pressers, how dovish or hawkish he's going to sound in those, causes a lot of volatility.
Oh, yeah. I actually love it. The past few times that he spoke, like those 2:30 meetings, It's like mixed. Some people will say it's dovish. Some people will say it's hawkish. No one's really sure. Just tons of uncertainty. So usually the most fun days to trade, though, if you're experienced, because those are the ones that have the high liquidations.
So walk me through, once again, not financial advice, walk me through how you're trading these days. Like, are you setting, buy and sell orders? Like, what are you buying, calls and puts? What are you doing?
So on days when FOMC, stuff like that happens, I try and trade the market the days prior to it. So I try to have everything in cash that day because it could honestly swing either way. The last time I had money in the market was, I think it was the September CPI data came out.
Okay.
So something like events like that, I definitely try not to have money in the market just because it can go either way. We saw it crash. I was bullish, though, expecting it to go up. Did, but again, they liquidated everyone that was shorting the market at that point. It just pushed the price up. So a lot of it is just setting limits, buy orders at certain prices, levels of support, and not having stop losses if it goes past a certain place. It really depends on risk reward. If I think I can make more money going long than short, then I'll put money in. But if I think it's going down, this is just a super volatile market right now, so I'd rather stay in cash on the side.
Okay. When you're looking at these levels, do you mind pulling up TradingView and kind of talking through this a little bit, because it's something that I find interesting, and I think maybe some of the people who are new to our channel or new to investing in general, could find interesting also.
Sure thing. Let me just share screen. All right. All right, there. Can you see the trading view for BTC?
Got it. There we go.
Wonderful. Yeah, so this is just a daily chart looking at this. Zoom in. Most of these are just levels of resistance or like patterns. So one that I was tracking was this wave right here. This is a whole Elliott wave theory. This is a wave 4 going the bounce up. I was tracking this all the way down because this is where I'm expecting to one of these two levels. I'll go into this one in a second, but right here it broke out of it, and I think this is a bit of a kind of like a bull trap, to be honest with you. I don't think there's a lot of legs to go further upside, and that I use some of these indicators such as volume and stochastic RSI here to pretty much gauge what the momentum of the space is. Lower volume and the price going up usually tells me that it's getting to a point of exhaustion. And then when you see the stochastic RSI up here higher, that tends to mean that it's overbought. So there has to be some pull down. As you can see up here, overbought, came back down here to oversold, and then it just keeps going back and forth. It's a good indicator that helps you see what the momentum is going to happen. It doesn't tell you exactly price, but used with other indicators and using supports such as certain levels where we keep hitting. So right here in this yellow bottom line at 18.5, we constantly keep hitting off of that, and that created the bottom of this descending triangle, the descending part coming from the top here at 25 that we saw back in July down to where we are right now. It's a lot of stuff to talk about, but once you get into it, it's actually a ton of fun. Like it's just easy to navigate.
I heard someone say the other day, I'm curious your thoughts, that technical analysis is the male version of astrology. Curious your response on that.
So I love technical analysis just because I think it tracks psychology in the market really well. Again, that's with Elliott wave theory too. Over time, we can see that there's these momentum swings, and then usually when people get to a point where they're overbought, or like this, for example, where we are right now, we're extremely overbought on the daily on most indicators, but people are still putting in, and that's usually the sign of distribution where people are pulling out of the market, but other people are buying in. And if you just are able to track those levels, you'll see where it'll top out most, and then the retracement of like, I hate throwing out big words, but like Fibonacci retracement levels, you could see where it was going to pull back.
You just love throwing out don't lie. You love, throwing out these big words and sounding all smart and shit.
No, it's terrible because I remember when I started doing this stuff, I didn't know what the fuck anyone was talking about. There's definitely some good traders in the space that you can learn from, and it's definitely worth doing it because then you don't have to rely on anybody to make your own decisions.
Yeah, that's a whole other can of worms we can open around like who to listen to. Personally, I just listen to everything Jim Cramer says because he's on TV, so he's got to be really smart, right?
The fact that he's still on, that means he's got to be doing something right.
Yep, his newsletter and his investing group and all that stuff, top notch. So in addition to FOMC on Tuesday and Wednesday with the presser from Jerome Powell, Big Daddy Jerome, as we call him around here, on Wednesday, we have jobs report on Friday. We'll see where unemployment is. That will obviously impact the market. If we see unemployment rising, then the Fed is going to like that. So it's just everything's so ass backwards in that, like, oh, if things are getting worse, the Fed is happy. So that means they're going to, maybe slow rate hikes a little bit sooner. We've seen some estimates that, they want to have the rate up to 4.5%, 5% by March, which would be pretty wild. But yeah, if we see a rise in unemployment, then I think we're going to, chance of a 50 basis point hike in mid-December is more likely. If we see that unemployment went down, then a 75% basis point hike becomes more likely, and we'll see the market respond in kind. Anything else to add on that front?
No, I think that was said extremely well. Just, I mean, they need unemployment to rise in order to lower inflation. But again, that also just causes
Oh, you froze on me, Kev.
people to pull out more. Am I still there?
Yep, I got you.
And now you froze on me. I can't hear you. Wonderful. Got you. A little bit delayed, but
Awesome.
yeah, it's just an avalanche. It's going to be, I think a lot of people are super bullish right now, but I don't know what 2023 has in store, but I'm not excited in terms of being bullish.
Yeah, a buddy of mine said the best investment you can make right now is in cigarettes, bullets, and cans of beans. And he's a really smart guy, so I might have to listen to him on that one. We also have the Bank of England on Friday, expected to announce a 75 basis point hike. We've seen a lot of volatility over there, both on financially and politically. We don't need to get too much into that because I by no means know a ton about the politics of the United Kingdom. But that's what's going on. So now we're going to get into the fun part, which is the crypto market. I know this is your bread and butter, what you spend a lot of time on. Let's talk about Dogecoin. I'd love to. We saw a huge Doge pump. Anytime that Elon Musk is in the news, his acquisition of Twitter, the story that, Twitter could use crypto payments on its platform, which immediately got Doge back in everyone's head. We saw Doge absolutely rip over the weekend. I need to pull that up. I need to add that to actually my trading view. Why don't you go ahead and talk about that for a second, Kev?
Yeah, so this is kind of like perfect timing in the bear market too. We're right towards the end. So for Elon to acquire Twitter, and then people such as Vitalik and Sam Bankman-Fried are talking about potentially having crypto payments like gas fees on Twitter or other social media sites to eliminate the chance of people creating bot accounts and stuff like that. It would just deter them away. People went crazy over Doge. And it also had the most liquidations over the weekend. Let me pull up. I'm going to go to CoinGlass real quick right now. And in terms of liquidations, there's actually been a ton today. But in the past 24 hours for Dogecoin, there have been $20 million worth of liquidations. And I guarantee you those are retail investors.
Will you pull that up on TradingView real quick? Because the Dogecoin chart over the last, if we look at how it was trading sideways for months, and then what happened over this weekend, it was pretty hilarious.
Yeah, and you can actually, let me just pull it up. You can actually see this happen throughout Doge's history too. And I'm pretty sure those are the times when Elon Musk has been on SNL. Let's see. Can you see it? Okay, there we go.
Oh, there we go.
All right, so this is just the daily view. So, yeah, it was trading around 5 cents, 6 cents, right? And then instantly, right there, 15. Let's measure this. That is 160% from where it was.
In a matter of hours, that was fun. Are you a Dogecoin believer?
Here's the thing. With meme coins, there's money to be made, as we've seen. I'm not gonna shit on any coin that's people have gotten rich off of. You know what I mean? And it has a huge base, and I think it's also on a pretty good blockchain. It's on Litecoin, so it's pretty fast for payments and stuff like that. I don't like that they print it. It's a huge circulating supply. I think that long term, not right now, that there is a use case for Dogecoin with Twitter in some way. I think that Elon's definitely going to integrate it. That's my opinion. I don't know if that's not financial advice at all, but I think that there is some use case. It's survived as long as XRP and Bitcoin.
Yeah, I think the use case with Twitter, potential use case with Tesla, and beyond just buying cars, everything else that they're doing, because Tesla has their hands in a lot of different sectors right now. I could see it. The cultish following, I know it's second to none, up there with like the Tesla fanboys who, I mean, those basically go hand in hand at this point. You know, if you're an Elon person, you love Tesla, you love Dogecoin. Can you kind of get into the never-ending supply and how it's determined? Like, you know, what causes more of it to be created, as opposed to Bitcoin, which there is just a set amount that there will ever be?
I believe it's just in the code.
Okay.
With Doge, it's just, you know, anyone could just mint more Doge. It's just nonstop minting. I think it's like 10,000 per hour or something. It's some crazy number like that. I don't know the exact number, but
okay,
you know, Bitcoin was capped at, I think, 21 mil, and then 19 mil is in circulation with 2 that's currently missing. But yeah, usually those are deflationary assets. Bitcoin, Doge is definitely inflationary, but they also released a roadmap for the first time in like its entire existence last year. So, you know, maybe things are going to turn around. Maybe they'll start burning it.
Maybe they're just starting. You know, it's starting to grow up. It's like a teenager, right? Like it's finally getting its shit together. So we'll move on from Doge. Any other alts that you want to discuss that have been, you know, I saw we talked and I finally, yep, Riggins, you are. I mean, if you might as well just retire now. Like you could start spending your future millions or billions if that is your entire portfolio. Kyle, appreciate the comment, buddy.
Too.
I did see that, you know, Chainlink had a nice little run. I added some Chainlink after our last discussion, you know, regarding that. I think, you know, as I look into it more, I think this, you know, as you said, has a lot of potential during the next bull market. So going to be dollar cost averaging there, hoping to stake when that opens in December. So yeah, any other alts that you want to discuss?
Nah, I mean, we've seen, again, this, I don't trust this pump at all, in my opinion. That's why we saw Doge run up like crazy. We saw Shiba Inu run up 50% or so. I don't think they're going to last long. I think they're going to come crashing down. I think there's a good chance that all altcoins right now could drop 35 to 50% still.
Okay.
We saw Bitcoin back in November of 2018 drop from $6,000 to $3,000 within a span of a month. That was already coming down from like 13K, from 13K down to 3 over the entire bear market. So I think there's still a ton of room to go to the downside, and there's going to be tons of opportunity for some of the not better projects, but things that I think would be worth getting into. Like I will be focusing on Chainlink, XRP, Cardano, those.
Okay. Let's talk about the monthly and weekly close for BTC. That was on the agenda as well. Yeah. Can you pull that up? Are you on Google Chrome?
Yeah,
okay. So on the bottom, so we don't see the zoomed in thing, when you go to present, you can select share screen and then Chrome tab, and it'll take you right to that tab.
Oh, wonderful.
Yeah.
Right. Share screen.
Chrome tab. This is exciting.
I'm not even on Chrome. That might be why.
Okay. Well, see, you gotta come on. What are you doing?
I'm on Opera. I'm using Web3.
I support that and I appreciate that. Everybody, thank you for bearing with us. It's our first time doing this type of show. Okay, there we go.
Got it. Wonderful.
Beautiful.
All right. So let's go to the weekly close. It's gonna be interesting. So weekly close last night came up at, let's see, right here at 20,631. So shot up a ton. And you also saw that down here in the stochastic RSI went from right about, what does that say, 53 to, or no, my bad, 62, 56 to about 77, 63. So it's going into the overbought territory in the weekly. And that's not necessarily always a good thing. As we can see from here, when Bitcoin was overbought last time, it was right here at 48,000. And when it came down to oversold, it was at 17,600. So if this,
that's great.
Yeah, I'm not saying it's going to go down that much, but we'll look at the monthly close and see where the level of support is. So we're going towards overbought. So this could honestly stay up in the overbought territory for another week or two. Eventually, it's going to have to come down. And I think it's going to line up nicely with the monthly, which let's go over there now. If we look at September's monthly close, we closed below 19,644. And this has been huge support for Bitcoin in the past, as we can see right here, this green area, and as well over here where it whipped up. Closing below this is not necessarily good because that means that this line has become resistance. Currently, we're above it today. If for some reason there's some fast flash crash and we go below it, that means that 1966 is resistance now, and we're going to have to retest support. And that next support comes down here at 13,976, so about 14K. And that's honestly the target that I'm expecting, just with how the weekly is looking. And it's kind of scary, but it's definitely in play, in my opinion.
Okay. So as we look at it, and we can go further back and look at, November, December 2018 and kind of look for any patterns there. Like, what are let's pull that up real quick, if you don't mind, Kev, and kind of see where things were back then.
Gotcha. Yeah, so they were trading actually kind of differently. Let's go to the daily just because we can see how it was progressing over a certain period of time. I circled it earlier so we'd find it easily. There it is.
There we go.
Okay, so this was, bear market, trading side was kind of like a crab market at this point. But what happened here was tons of institutional wallets dropped all their Bitcoin on the market. And that just caused all the retail investors to start selling off. And we saw it from 6.4K drop over the course of a month to 3.1. And this signaled the bear market bottom back in 2018. And then the rally ended up leading in what we all know, 69K. So it's kind of crazy. This is, sideways trading. And because it really didn't break out, didn't form a new trend, it was just a continuation pattern that eventually just followed the trend in the bear market and just
that big rally on the right of it, that first big green leg up.
Right here?
No, keep going over more. That wasn't until when?
That was in March of 2019. So arguably 2 months after.
I love how I pointed at the thing on my screen, like you could see what I was talking about. Jesus Christ. Okay. So, we're looking at many, quite a few months potentially. This is all, maybe this is just, astrology for men. But potentially, we could see that big leg down to, 13.6 was your price target, or 13.4?
Yeah, I think they're going to get a wick down if it does go to that level, but I think there's going to be tons of buying pressure coming in. As we've seen right now, people are excited to be bullish. You know what I mean? Like, people want to make money again, but ultimately, we don't make the market. We just have to play the market maker's game. And right now, I think their game is they want to buy cheaper. They would have bought it 17K if they wanted to say that was the bottom, and they just didn't.
Okay. And then where are you, that statement of they didn't buy at 17K, are you just going off of, the trading volume that we're seeing? Like, what makes you believe that they didn't buy any there, that they're trying to push it lower?
So there's certain indicators that have wallets. You can tell how much Bitcoin is in certain wallets. So be like 10K or more, or over 1,000. And I think it's on CoinGlass or something like that. I have to search for it, but it uses like API data to pull that from, the exchanges, all the wallets, because we have the DLT from Bitcoin. But you're able to see when they were buying and when they were selling, and they just didn't buy at 17K. It was the accumulation wasn't there. You saw a little bit during this pump here, but in my opinion, I think that they're just going to drop that on the market like they did in 2018.
So you think that we're seeing primarily the buying coming from retail, and we're getting ready to see, institutional money that does have any Bitcoin dump that? Okay. It makes sense.
It's dangerous.
It is dangerous. Short term, and this is where, I go back and forth between I'm not trying to time the market, while at the same time using the data that is provided, and, some of the advice that very smart people like yourself and other people I talk to, what what is your, because we're not giving anyone else a strategy for what they should do, right? We're just kind of talking through what we do. How are you handling things right now? Do you say you're all in cash currently and you're just going to continue to play these levels as they go?
Yeah. So in hindsight, I probably would have bought into this pump at 18.6 when we saw it drop. 18.6 was a lot of support, but I have more conviction that the price is going to go down than it is going to go up. So my risk reward is more to the downside than it is to the upside. So I'm sitting in cash on the side, just waiting for my targets to be hit. And I think we'll get a really good rally from there. I think it's just going to be a local bottom. And on the macro, I don't want to go into patterns today because we've gone through a lot of stuff. But there's we'll see possibly a really good rally. I think after we hit that level of support, I think the buying pressure is just going to come in, and we could see it go to 30 to 45K before we even know it. We saw how it went to 50K from, what was it, 3K to 19K back in 2020. So,
difference now though is that we're not going to get we're probably not going to get the money printer being turned on thanks to COVID. So I think people who are expecting, people who are newer to investing, whether it's stocks, crypto, whatever, who are expecting like, oh, we saw a bear market, in 2020, it's going to bounce back like that. I mean, maybe eventually, but it's going to be a lot longer grind this time around than it was back then, in my opinion.
That's actually a good point brought up too. In 2020, we had that COVID crash. That was a flash crash in the middle of the start of a bull market. I think that's the good thing about technical analysis too. Like that was just one hiccup, one news event that hurt the market, but in the end, the structure was still ready and primed to go up. So following technical analysis, you're going to have bumps going up and down with the news events, but there's a good chance that you're going to be able to forecast where the market's heading.
Yeah, and I mean, there's so many headlines right now that I think there's more potential negative headlines than there are positive, right? Like the positive ones would be, some of this data that comes out, potential end to the war in Ukraine, which doesn't look like that's happening anytime soon. Bad ones being war in Ukraine gets worse. We see tensions continue to escalate over in Asia. There's a lot of downside risk right now on the macro side. So I think that's all great. Anything else you want to touch on before we head out of here? We've covered a lot of stuff today.
I'm good. I think we covered everything that was important, what we're looking forward to in the next few weeks, coming weeks. I got nothing.
Okay. Well, we are going to be back Thursday afternoon. We're going to do this again. We're going to kind of talk what the market has done post FOMC meeting, how we're viewing it going into the weekend. We'll be on at 5 p.m. Eastern Standard Time on Thursday is what we said, 4 Central.
Sounds
okay.
Good.
Perfect. So we'll be back then on Thursday. Thank you, everyone who watched today's show. Please like, comment, subscribe to our channel. We appreciate all of it. For Kevin, I am Jeremy. Have a great day, everybody. We will see you next time.
Happy Halloween.